Turn now into some of these big banks. CitiGroup and Bank of America are trying to figure out how to raise more than $10 billion each in new capital after learning their results at the government stress test. Now, that's only a report. It was out in the Financial Times this morning, but it's something that investors are keeping an eye on. Both of those stocks are trading lower overseas. The stress test results on 19 of the country's biggest banks were supposed to come out today. They're not. They're being pushed back to Thursday now that we know that. There is concern about how they will affect the already battered financial sector, but moreover, how they're going to affect this market. Joining me now to talk a little bit about this is Mike Paul. He's the president and senior counselor of the public relations firm MGP and Associates, dealing with some financial clients there. Stephen Lieb, he's the president of Lieb Capital Management, and R. Sitharaman, he's the CEO of Doha Bank. So we have a lot to get through, gentlemen, today, because these stress tests are looming out there on the horizon, Stephen. So we already have the earnings reports.
Right.
So what are you looking at from these stress tests? What do you make of it?
Well, I think you've already seen what you're going to get by and large from these stress tests. I don't make a whole lot of it. I mean, you know, I'm very cynical. I think that the government right now, and for very, very good reason, is trying to basically calm people down and convince people that
whatever. Are they doing that?
To some extent. But
are you calm this morning, sir?
No, I'm not. I'm never calm, especially in this world. Right now, I don't think it's possible. I mean, the bottom line on these banks, you've got to get from here to there. Here is they're not lending money. There is they are lending money. And it's very hard to get from here to there if housing prices are still declining.
Some of these government's a big investor in these banks now. Maybe the government knows something that we don't.
No, I mean, the government doesn't know, for instance, how bad is the credit card situation going to get? How bad is commercial real estate going to get? These aren't factored in. And, these stress tests, Jenna, are really ridiculous on a certain level. You take CitiGroup right now. CitiGroup's trying to avoid becoming a government entity. Yet CitiGroup has $300 billion in assets that are guaranteed by the government. That's 4 or 5 times their equity. The government says we're no longer going to guarantee that.
So you say this is irrelevant right now?
It's totally irrelevant.
So then, Sitha, on to you. If your government put forward a stress test, do you think you would pass that stress test?
Absolutely. It's very vital for us to showcase the balance sheet components have got clearly well driven.
So this is okay? You would feel comfortable?
Absolutely. It's very, very vital. I have practiced stress tests for the last 2 years. We accept Basel II as our principal parameter in terms of governance. Central bank regulators in the Middle East, in the Gulf, they have accepted Basel II. That's what Fed Reserve is now going to insist. Conceptually, you have to look at your credit, capital adequacy. You have to look at your risk profile, on balance sheet, off balance sheet risk, market risk, operational risk. Clearly, it has to be factored into your profitability as well as capital adequacy. And again, this sectoral distribution, whether it is credit card or real estate or stock markets, what sort of diminution with the global meltdown, what impact it has got in individual dimension. It has to be measured and then factored into your risk profile.
So would you feel more comfortable with the results of these stress tests, doing businesses with some of these partners, knowing if or if not they've passed the stress tests?
Absolutely. If you talk about global governance, if you talk about global transparency, these financial institutions are global institutions. We talk about Citibank. Citibank today has got wide-ranging dimensions globally, over 250 million customers. Globally, consumer confidence can be established by ensuring they have passed the test.
So you're confident in the U.S. government to do this, then?
Absolutely.
Okay, well, let me leave it there for a second, though, because, Mike, you deal with these guys, these clients. Talk about some crisis PR that needed to be done.
That's right.
But the numbers speak for themselves, and all of that we kept saying throughout this earnings season is that a lot of these big institutions beat expectations. They're public. You can look through their books. So what do they do when these results come out, when they already have, hey, their earnings reports on the table and the whole kind of PR person behind that?
Well, what they're concerned about is beyond numbers. That's the bottom line. They're concerned about perception. They're concerned about what the average consumer is thinking. And one of the things we were talking about in the green room is just the example that Steve mentioned, both of them actually, credit cards. Credit cards are the next AIG. That will be the headline coming out soon. Why is that so important? Because consumers are lying to themselves, lying to their small businesses and saying everything's fine, putting it on the credit card.
So then are they powerless based on that? If everyone's lying to themselves, then are you powerless or some of the big banks powerless to really change this image?
Well, here's the catch-22. You got to inject the politics as well. One of the things we just saw is that Warren Buffett is saying, you know what, it might not be so bad for a large bank to fail. You think the Obama